Well, we're expecting the Fed to maybe just make modest adjustments and some tweaks, on technical tweaks to things such as the interest on excess reserves and so forth. So I think more of the focus will be on its damage assessment of what's happened, particularly in the context of Q1 GDP, of the GDP numbers coming out, which I think will clearly show a significant deterioration. So I think the focus will probably move away from the policy, because the Fed has already moved very, very quickly. It's moved many times into meeting rather than at the meeting. And in fact, we also had a recent statement about extending some of its backstops to smaller counties and municipalities. That I think it's more going to be about the reality of the data deterioration and the Fed's assessment of that. So that may dampen the mood a little bit, because the Fed has moved mountains in terms of policy, in terms of getting in front of things. But I think there could be a reality check against the data as we come through into this.
But here's the thing, Claudio, if the Fed keeps coming back to the market, supporting businesses, supporting the junk bond market, the investment grade market, basically plugging all the loopholes, plugging all the gaps, they're also talking about buying ETFs and supporting the equity markets. How do you expect further appreciation in the dollar? Because so much money and so much stimulus in the system would just make the dollar unattractive.
Yeah, but again, there are a couple of things going on. I think clearly the dollar has been resilient as of late. We've seen a little bit of softness coming into the dollar. We think that's partly because of some rebalancing in equity flows and so forth, because the equity market in the U.S. has outperformed yet again relative to the rest of the world, and that may have had some rebalancing on a short-term tactical basis that may have lifted the euro. But again, we think that move is temporary, so we still think that euro-dollar goes down to 105, because on a relative basis, we feel that clearly the coordinated response, both not just on the Fed and the monetary policy, but the fiscal side, has been quite strong. And obviously, with the case count subsiding, there's now a focus on reopening the economy. So I think that still lends the dollar strength, particularly against the euro, over the next coming quarter or so. So that's why we're still focused euro-dollar downside to 105, despite this temporary bounce to what we think is rebalancing portfolio flows. The ECB is another matter. I think here in the European context, we have still a lopsided, aggressive monetary response, but still a complicated and opaque fiscal response.